Hey, what's up everybody? Alito after back with a new video. Hopefully you can hear me and the sound quality is clear and there's no interruption with the wind. It's a little bit windy, so there might be some muffled noise as we have our conversation here today. So again, in my last video we discussed the idea of the differences between a credit repair process and a credit sweep. We also discussed what's the differences in terms of the ethical standards of doing it and the non-ethical standards of doing it. There's actually quite a bit of difference there. We discussed the concept of getting in trouble if you don't do it right and if you don't execute it right. So let's discuss that a little bit more in depth as to why I believe this is a very important part of building substantial wealth when it comes to your credit. One of the biggest things that I come across quite a lot of people do is they make the mistake of thinking that credit repair is a short-term strategy. And here's why I'm going to explain to you the importance of credit repair as a long-term strategy. Here's where I'm going to explain to you the importance of understanding credit repair as you need to understand it and not look at it as anything else but a long-term strategy. So here's the thing. A lot of people start off with credit repair and they look at it as a short-term strategy. And the way it works is they get into credit repair, and the reason why they get into credit repair is because they want to fix their credit to get some immediate funding. Whether it's short-term funding or whether it's a loan that they want to get out of trouble or something that's along those lines. And there's a problem there with that. And the problem is the fact that if you're thinking about it like that, then you're not really motivated to build up your wealth. You're not really motivated to stack up your financial credibility. And when you do it that way, when you're trying to build credit in that philosophy and that concept, what's happening is you're going to cripple yourself from future opportunities. You're going to cripple yourself from being able to stack up your credit the right way, where you can actually access a good amount of liquidity in the future in order to be able to use that for, let's say, building your wealth, or in order to be able to use that for, let's assume you want to do something that is a prime partnership structure, which enables you to tap into unlimited wealth or opportunities to build wealth. So this is where, I believe the credit partnership model can work for you if you give it the time to understand it, if you give it the time to respect it and what it really is designed to do. And, this is where our conversation today is going to be going. So number one, credit is a long-term game. You just have to, let it sink in. You have to let it be a part of what you want to be in the future. And you have to learn to accept the fact that it is a long-term game. I'm sorry about the background noise. There's a bunch of cars, so you're gonna hear some motor vehicles behind me. But with that set aside, let's look at the bigger picture. Let's look at some of the things that we need to focus on to make credit work for you in the long-term process. The first thing, if you're building up credit and you haven't really looked into your existing creditors, which a lot of people are making the mistake of not doing, you have to look at your existing creditors and you have to work with your existing creditors to be able to stack credit and build on top of that. You have to work with your existing creditors to be able to get modifications on those accounts, and some of these modifications include getting a limit increase, which is a very normal thing to do. Some of these modifications can also be a process where you actually communicate with them and see what other offers they have with their existing branches or the products that you're already using. It can be something like a complementary product that you already, for example, if you have a credit card, they might have another one that you haven't really tapped into that can offer very easy 0% balance transfers. And here's where the magic comes in, right? So let's say you want 0% balance transfers. This enables you to basically transfer your debt from where you are into a much lower interest payment and be able to pay down that debt much faster, assuming that you are carrying high interest debt in the first place. So that is really good. So that's one of those reasons why I believe, working with your existing creditors is so important, but a lot of people don't really think about that because they're so caught up with the short-term game. They want to get access to funding. They want to get out of the existing situation they're in. They want to get rid of those negative items. And all that stuff is wonderful, okay? But if there's no substance behind why you're building credit in the first place, you're not going to build your wealth. You're not going to get any closer to building the wealth that you want to build or establish the wealth that you want to establish. So with that in focus, let's talk about some of those things, right? So we talked about balance transfers. One of the good ways to really work with your existing creditors to get those things underway and to really formulate a structure where you're able to do that. The next thing you want to probably focus on, and I think this is very important, is the idea of improving the limits that you have with your creditors, but strategically. Now, what I mean by strategically is you have to start using your credit. See, a lot of people are sitting on their limits, on their balances, but they're not really using that credit. And if you're not really using your credit to the full potential, you will never be able to access, the limits that you would be able to otherwise. So I'll give you a good example of that. In the business world, we use credit cards we use them in a very aggressive level, but we know the cash flow that we have is enough for us to pay that debt down. So when we use those credit amounts, we're easily able to come back to our credit cards, or let's say whatever loans that we're stacking on, and be able to pay that down. When we do that, it enables us to go back to our creditors, and we're able to actually obtain a higher limit just by doing so. And we're actually able to obtain an amount that's actually quite reasonable, which enables us to kind of double our business if we know how to use it the proper way. And this is just the business world. We're not even talking about personal credit here. So let's assume that you're using the same methodology or philosophy with your personal credit. The possibilities are literally endless. But it's really up to you to figure out, hey, what is the best course of action for me on a personal credit level? And using the existing resources that you already have, we know that you can get balance transfer options for 0%. That's one way of doing it. But the other way is, hey, get higher limits. And the way to do that, like I just explained, and this works if you don't want to get a hard inquiry. See, a lot of people ask me, Ali, it's not true that you cannot get a higher limit without going through a hard inquiry. And the reason why people say that is because they've gone through our process where they try to obtain inquiries, and unfortunately, they try to obtain limits, let's put it that way, and unfortunately they've been tapped into a process where they have to go through an inquiry. So this is where the damage happens. If you don't have a utilization in your credit, and you haven't used those balances, if you haven't been active financially with those credit card companies, then that whole thing that you just did in terms of getting a higher limit is nullified. And the reason I say that is because you're not demonstrating any form of confidence with the creditors that you're with to say that I'm using your credit cards or I'm using your financial product in a very aggressive level, and I'm very responsible with it, and I'm paying it down on a regular basis. So why don't you just give me something that I can work with that enables me to borrow more, for a short period of time, or let's say the long-term game. And it's like the business world. You're doing the same thing where you're using a lot of debt, you're paying it down, that debt is being paid down, and then basically we're tapping into the personal credits to increase your limits. But it's the same philosophy with your personal situation. If you're not using your personal credit the way it's meant to be used, then you're crippling the ability to borrow more. And what I mean by that is, okay, you know your financial capabilities, right? You know what you can pay, what you can afford, what you can't afford. Given those things, given those tools and resources, you need to be able to tap into that. You need to be able to go back to the creditor companies and explain to them, instead of pulling a hard inquiry on me, look at my transactions in the past couple of months, and based on those transactions, give me a limit that would make sense for me. So in that concept, it's a lot more sensible, and it actually does make sense for you to do that, because now you'll be able to tap into more credit just based on your transaction volume instead of your hard inquiry. And nobody wants to go through the hard inquiry process, is just because it doesn't make any sense. And I think that, you don't want to cripple your ability to borrow credit down the road just because you're desperate to get more limits. And this is what's happening with the COVID-19 situation. See, a lot of people are tapping into their financial institutions and trying to communicate with them, but unfortunately they're not getting a desired outcome because they're desperate, and they believe that, hey, because of situations like these, the creditors are more lenient and they'll give you higher limits. But the challenge there is whatever limits you're getting is actually a very small portion of what you're potentially able to get if you structure it the right way. So I really wanted to shoot this out and give you guys the explanation of how to use your credit the proper way, and understand that it's a long-term game, it's a long-term process, and really understand the magic behind the transactions that you're doing on a very aggressive level, similar to businesses. And if you don't think it's important for you to think about it like that, then I want you to think about something else. Think about it as a stacking program, right? Think about it as every single structure you have with personal credit. The more you go into understanding your personal credit game, the more you go into making sure that you can tap into those type of resources, the more you'll learn. And if anything, do it for the sake of education. Reach out to those creditors, speak to them, ask them the questions about limit increases. What are some of the things they look into? And you'll get yourself the information that you need to be able to stack it in the future. So with that said, I hope you guys got some knowledge here in terms of why credit is a long-term game. I hope you understand the importance of how to stack your credit, understand how to communicate with your creditors. That's the most important thing that you need to focus on, because if you don't, then you're going to be basically stuck in this situation where other people are actually getting ahead. So with that said, this is your guide and mentor, Ali After. Catch you guys on the next one. Bye for now.